Good morning, traders and investors. Roger Scott here, senior strategist of The Trading Pub. Well, I'm liking it more and more every day. It's Thursday, it's September 21st. It's about 7:46 in the morning. The market's going to gear up to open up in about, an hour and 44 minutes? I think my math is still good. I still can think in real time. Thank God for small favors. Boy, oh boy, we got our head handed to us yesterday. Murphy's Law, right? We start a new program, the option income program, and the markets just start tanking. Well, it looks like there's more follow through. The question is it going to be a shakeout or is it going to be something meaningful? And that's what we're going to talk about today. So the Nasdaq is down about 150. The Dow's, this is definitely not random. Anything on the Dow above 120 points, 140 points, anything on the Nasdaq beyond 75, 80 points is not random. But this is definitely not random trading action. So the question is, what do we have to go by? What's going on? What is it that Powell said yesterday that we didn't know? And how does it impact the rest of the market? And most importantly, where do we go from here? And by the way, don't go anywhere. Make sure to like this channel, subscribe to our channel, subscribe to our Telegram channel. If you're watching on YouTube, it's Roger-Scott. YouTube channel, Roger-Scott. And if if you don't know how to sign up on Telegram, just go to rogerscott.com/Telegram. Please ask questions below the videos so that everybody could see the answers. I don't filter the questions below the videos on the YouTube channel. If you still have a question after that, feel free to send me an email, roger@rogerscott.com. No customer service emails, trading-related questions, please. Now let's begin. By the way, I opened up my VIP room. Today's Thursday. We're doing it at 11 a.m. I'm going to do a full update on our weekly option income trades, and I'll actually talk about them here as well. So if you are in that program, which we just launched, you will have some benefit from watching this video as well. Now let's get into it. Wow, it took 2 minutes to get through all that. So yesterday we had the FOMC announcement. I'll talk about it in a minute. Basically, in a nutshell, things are moving in the right direction, but they're moving slower in the right direction than we expected. Exactly as I said, except Powell is being a little more straightforward because we're actually getting closer to the end. He doesn't have to BS people as much because there's just not that much more to go, which is a good thing. The question is the market going to start perceiving that early or not? And that's where we're at right now. Now, what's interesting is I actually only thought there was only going to be one more rate hike this year because they usually happen in 6-week increments. But I guess they snuck one in November and December, which is really odd. Because when they said there may be another one this year, I was thinking, well, there's only one more. But I found out there's actually one in November and December. Usually they're 6 weeks apart. So anyhow, don't get me started on that. Again, Powell and his shenanigans. Today we've got jobless claims, manufacturing data, existing home sales. I don't think jobless claims is going to be very important. I don't think, well, Philadelphia manufacturing will be fairly important. Existing home sales will be very important because if you look at the home builders, we're right now sitting right at the 100 line. And again, this is obviously caused partly by yesterday's big selling pressure, but we are at the 100-day line. And if we cross the 100-day line, there's a good chance we will hit the 200 days. So keep your eye on this level on the home builders. And again, we'll talk more about sectors as we get into things. Also, the bond market, I hate to say I told you so, but the bond market finally broke down and it's finally below our support level. Notice took a while. Now it's there. The question is this going to make a new low and continue breaking down, or is it going to start coming up here and filling the gap? I find it kind of odd that it happened today versus yesterday, because I would have imagined it would have happened yesterday during the session while he was talking. But look, we kind of sold off in the morning, and then the entire day we were just kind of drifting a little bit, but there wasn't all that much volume. I mean, there wasn't that much follow through. I mean, look, just towards the end of the day, last 3 bars, hour and a half, not much below that. But again, we're opening lower. It doesn't matter how we got there. The bottom line is we are weaker. One of the things that's encouraging to the bulls is the volatility. The volatility is still very low, and market participants are not considering this a major point of contention. So as far as volatility is concerned, this is just a quick sell-off, which should bring us back in line. Now, looking at the major indices, which I want to look at right now, because this is huge points. We are sitting at the 100-day moving average on the QQQ and slightly above this level. Now, here's the thing. if you look at the QQQ over the last 3 months, let's see, from 623, we're at 9. Yeah, 3 months. We've gotten nowhere, literally nowhere. And I'm not seeing volume really higher here. So to me, this looks like a shakeout that's going to reverse because we didn't break the 100-day. I could be wrong, and maybe it's wishful thinking on my part, but I'm just not seeing any follow-through, not seeing any follow-through, which is a bullish case for the market. Looking at the SPY, let's just kind of look at all of it. We are below the 100-day moving average, and the question is going to be, are we going to continue breaking lower? We're like sitting right there at there, or are we going to start breaking higher? It's going to be a really, really important day. Now, what's interesting is the QQQ has a lot more to lose in this sell-off than the SPY. The SPY has some blue chips which actually go up, as you will see. Some blue chips went up yesterday. For example, CSX, XCL. These are 20-day breakouts. Newmont Mining, Kraft. These stocks made 20-day highs yesterday. Philip Morris, Southern Company, Amgen. So there's plenty of non-tech stocks making 20-week highs and breaking out yesterday. So it's kind of surprising to me. Let's just go back to where we were, that the QQQ is actually holding up better than the SPY, but that's probably because of the Dow Jones, which is impacting us even further. There it is, right at the 100-day moving average. So I think today is going to be a very, very instrumental day, because if we break the 100-day, we're probably going to go lower. If we go back up, then this could be a big, big shakeout. And we're going to find out that today. Let's look at a few other sectors. Let's look at the ETF and let's put everything together. So you can see right here, SMH, we're below, we're nicely below, and we're below this level. So if we don't rally today, all bets are off. So I really need to see how the market behaves today, if the market's going to sell further off or if it's going to come back up here into the range. This is going to be very, 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 very crucial today. Bond market, look at the bond market. Is it going to rally up? Is the SPY going to come back, or is it going to violate the 100-day and continue? It's really good to have the 100-day here, because a 100-day gives you another point of support, as you could see right here. Look at that. They tend to stop right near the 100-day. Or I mean, it's not exact, but it's it's a pretty good guide. Looking at individual sectors, let's just kind of give you individual sectors so you could see what's going on here. What a nasty day yesterday. And we just started a brand new income program, and Murphy's Law never fails. So broad market, sharp down. QQQ, sharp down. Financials, they're at support. They're not doing too bad. Russell 2000 right at the, and by the way, I told you this was going to happen. Remember when we were up here? Small caps are breaking out. No, they're not. All the way down here. Energy stocks, not doing so well, but they're holding up hell of a lot better than everything else. Consumer staples in the crapper should start going up if we have more inflationary data. Utilities actually held up better, and I like utilities right now. Industrial, not so good, and we have industrial data coming out today in a little bit. Healthcare did okay. Technology did not, almost at the bottom. Communication did a little better, held on. Materials did not. Home builders, oh boy, this is what I'm talking about. This is the area. This is very dangerous zone right here. If we start breaking down, oy vey. That's Yiddish for not good. My grandmothers spoke Yiddish. So anyway, Dow Jones actually didn't do so bad. Didn't break any key levels yesterday. And if you look at what's holding up, you will see right here, energy, utilities, financial, Dow Jones. You see how consumer discretionary, communication, and technology are coming off? That's definitely. And home builders right here. And boy, oh boy, we're not in a good spot for home builders right now at all. So we got to be really, really cautious. Today's going to be a major day. We're either going to have a nice reversal or we're going to have a further shakeout. But I don't want to predetermine things, because volatility is still not, going crazy right now, not just yet. Let's talk a little bit about what we can expect from the market, what's happening with the market, what's happening with the broad market, and then we'll take it from there. Where's my page? Right here. I highlighted it and everything for you. All right, Treasury yield jumped after the Federal Reserve signaled interest rates would be higher afterwards, not before, which is kind of odd. As widely expected, they held its target. At the same time, The updated economic projections revealed that most officials favored another rate hike this year. That wasn't a surprise. I just thought it was going to be beginning of January because I forgot there's one in December because I'm thinking every 6 weeks, and I know there's one in November. Policymakers raised their projection for the federal fund rate at the end of 2024 to 5.1% compared with 4.6%. Inflation is sticky, folks. Powell said officials are prepared to raise rates further if appropriate. Yeah, that we know that. And we intend to hold policy at a restrictive level until we're confident that inflation is moving down substantially. Inflation is sticky. They're going to continue doing exactly what they're doing. S&P fell to a 3.5-week low. Nasdaq posted a 3-week low. Murphy's Law, right? When you launch a new program, that's what happens. Interest rate sensitive mega cap stocks retreated after the 10-year note climbed 16-year high. Folks, 16-year high. That's inflation right there. We now have a 31 probability of a 0.25 basis point hike and a 39 of a 0.25 in December. I don't see how this number here is not higher. I mean, he pretty much said more than likely. I think they're being very optimistic, and this is going to put more pressure on the market. Today, we've got Philadelphia manufacturing. It's coming out in just a little bit. That may give us a little bit of an upside. We have existing home sales. Keep your eye on that index, that home builders index. Seriously. Initial jobless claims are not going to be anything we're talking about. Europe is tracking the U.S., higher for longer interest rates, Bank of England's policy decision later today. Travel and energy stocks led the decline. Very, very strange. On one hand, they're saying they're tracking the U.S. markets where tech fell out of bed, but on the other hand, they're saying travel and energy stocks led the decline. Hey, it's a different country. China closed lower. Not good for us as the prospects of higher U.S. rates dampen risk sentiment. Big tech companies, significant decline echoing substantial sell-off observed in the U.S. tech market. Meanwhile, to rebuild market confidence, China pledged to expedite implementation of additional policies aimed at solidifying its economic rebound. Japan closed sharply lower as technology heavyweights followed the trajectory of their U.S. counterparts. You would think England would do the same, but I guess not. And they were not happy about another possible year-end hike. I'm surprised that most folks are surprised at hearing that. Now, day trading stocks for today. FedEx, I think they came out with earnings yesterday, but whatever they came out with, it's already out. The stock is now trading above the 50-day moving average. Here's how I would play this. And no, you don't have to worry about borrowing this cost. Go and find what the overnight high is. Right now, the overnight high is at, let's see here. Right at, let me just see here, 265. Oh, excuse me. Yeah, the high is at 265.88. We're at 263 right now. We're a couple of points away. Put a buy stop above 265.88. Put a buy stop at 266 right here, and just wait. And if it doesn't hit it today, just cancel it. Because if the market turns around and starts rallying, this is going to give the stock a huge tailwind. Wouldn't do anything first half hour. I would wait, and I would buy above. I would buy it at that what did I say before? 266. Yeah, 266 level. 266 on a stop. Now, if it rallies above that level pre-open, you're going to have to raise the stop. But I think so far it's okay. So sectors you saw, indices you saw. Let's talk a little bit about weekly options. So we have a trade right now, our Carvana. Now, I want to talk a little bit about this. The option doesn't expire till next week, but we're supposed to close it out this Friday. The position has a big loss because, well, look at these bars. We had two nasty downsides yesterday. If this doesn't turn around today, I'm going to liquidate the position. But I want to give it a little bit of time because there's very strong support around these levels right here. And the position still has a week. And if it turns around and comes up, it'll grossly mitigate our loss. Now, I don't want to sit on I don't want to sit and hope. But at the same time, I don't want to liquidate a good trade. So we're going to let this trade, we're going to see what happens today. And if it stays around here or starts breaking down, we're going to liquidate it before the end of the day. And if it starts coming up, then we're going to hold on to it for another day or so. We also have a position in NVIDIA, but that one doesn't expire. This is a bonus trade, and we're right at the 100-day moving average. Typically, we bounce off the 100-day or we drop hard. I'll probably hedge this trade with a credit spread to the upside today. It's a bonus trade, and we still have a couple of weeks, and I think in that time, NVIDIA will start coming back up. So I'm not as gung-ho on this one. But I wanted to give you a full update so you guys know exactly where we stand, and you guys know I'm very committed to this program. We're also going to make 2 tabs in the spreadsheets, one for tier 2, the risky trades like the ones I'm showing you, and one for tier 1s, and I'll probably give you another bonus tier 1 today. Why not? Folks, before I let you go, Garrett Baldwin, our resident energy economist here at the Trading Pub, has been diving into his research, and guess what's buzzing? Oil, black gold, Texas tea. Man, I love it. So Garrett's been talking nonstop about the energy supercycle that could be the biggest opportunity of the decade. Before you know, everyone will be complaining about skyrocketing gas prices again, but Garrett's ready to show our audience how to take advantage of it. Because when he's not crunching numbers, he's always crunching numbers. He loves playing detective, man. I like to play detective too. And lately, he spotted the big wigs of the financial world sinking cash into oil. It's like a billionaire magnet right now. Warren Buffett alone has dished out over $11 billion on energy, and he's not stopping just yet. Click the link below and join Garrett at 2 p.m. Eastern to hear all about it and learn the tickers he's playing with right now. Follow the link, and remember, VIP room at 11 a.m., and I'll give you a full update on the option positions in the weekly program. Bye. Have a great day, and hopefully we'll get some upside, but we're watching this carefully. Bye, folks.